Hello, Southern New Hampshire Accounting 317 students. So I wanted to do a quick walkthrough video of a problem so that you can see how you determine whether or not impairment of an asset has occurred. So I'm taking a look at Vaughn Incorporated. They purchased equipment for $1,408,000 in 2025. And 3 years later, the equipment has an accumulated depreciation of $550,000. Now, Vaughn is concerned that this equipment has been impaired. So they've done some analysis and they've said, okay, our future cash flows are $895,000 and our current fair value of the equipment is estimated to be about $698,000. So they're kind of looking at, they're going, okay, our fair value is $698, and our future cash flows are $895, and we're trying to figure out if our equipment has been impaired or not. So what we're going to do is we're going to compare our book value to our future cash flows, and that's what we're going to do first. So let's take our $1,408,000, and then let's subtract our depreciation, and that's going to give us, oops, I think I'm going to want that to be dark, okay, so we can see. And what I'm going to do real quick is I'm just going to make that kind of nice looking for you there. Okay, so this is our book value, and I'm going to write book value so that you know what I just got there. And this is our total original cost, and this is our accumulated depreciation. Okay, and then that's the total cost. If you haven't taken principles for a while and you're a little bit rusty, your total cost, original cost minus your accumulated depreciation is going to give you your book value for your assets. Okay, so then what we want to do is we want to compare this to our future estimated cash flows. So let's take a look at that. Our future estimated cash flows are $895,000. So let's compare that to our $895,000. And guess what? Our future cash flows expected from this equipment are greater than our book value. So since our future cash flows are greater than our book value, this means that no impairment has occurred. So that's all we need for that. We just need to know no. So there's our answer. No impairment has occurred for this particular one. Okay, so looking at a different one, let's go on down. And let's take a look at our Milestone Project 2. You're going to be working on that this week, and we're going to have an impairment journal entry that we need to do. So I believe it's our second entry. It's February the 6th. And so our problem says it's been determined that the intangible recorded for a patent has been impaired by $50,000. You don't have to calculate it. You don't have to figure out if it's been impaired. None of that stuff. They just tell you it's impaired by $50,000. So the patent was owned for 2 years, and it was estimated to be worth $120,000 and has a life of 10 years. Right now, to do this impairment entry, that's just not really information that we're even going to need or be looking at this point in time. So we want to book the journal entry for the impairment. So what we want to do is we want to, of course, we've got our date. We'll put our date in there, right? I don't know what year it is for that. I'm going to use 2024. You can look on your problem and see what year that's being used in that problem, and so you get the right year on those dates if you want to do it that way. So what we want to do is we have an account called impairment expense, and we are going to debit impairment expense for $50,000. And in this particular case, we have an account that we credit. It's going to be called long-term investments, And intangible asset, I believe, is the name of that account that we are given. You may look in your chart of accounts to make sure, but I'm pretty sure that that's the name of the account in your project that you're given. I'm going to just make that a little bit longer so we can see that better. Okay, and then we're going to credit that for $50,000, and that is going to be to record the impairment of HAP. Now, you will notice in your milestone project too that you are given some information a lot of times. You are given perhaps the amount of the vehicles that they currently have. Well, if you go over to your ledger account, you don't need to do that when you do the milestone part of it, but if you need some help in seeing if it's already there. The beginning balances have already been recorded. So in some of your transactions, you're given a little bit more information than you actually need. And what you can do to figure out if that's already in your ledger is you just, look at that ledger tab and you'll see a beginning balance for those accounts. And then you know that the transaction is giving you some information, but it's already in there, so you don't have to worry about it. Okay, thank you so much for being here and thank you for listening.